on January 3rd, 2026, they invaded. But Venezuela was not alone. They were part of a broader trend. Russia was selling 5 million barrels per day in non-dollar currencies. Iran was selling 1.5 million barrels per day in yuan and euros. Saudi Arabia was negotiating with China to accept yuan for portions of oil sales. The petrodollar was not just losing Venezuela. It was losing its grip on the entire global oil market. By late 2025, an estimated 15% of global oil trade was occurring in non-dollar currencies. That is approximately $410 billion per year out of $2.74 trillion in total global oil sales. The trend was accelerating. Projections suggested this could reach 25 to 30% by 2027. And then, on December 28, 2025, China and Venezuela announced a new agreement, $80 billion over 5 years. China would rebuild Venezuela's oil infrastructure. In exchange, Venezuela would supply 1.2 million barrels per day to China, all transactions in yuan. This was the breaking point, because this deal was not just about oil sales, it was about infrastructure. China was investing in Venezuela's long-term production capacity. They were building refineries, pipelines, ports. They were integrating Venezuela into the yuan system permanently. This was not a temporary arrangement. This was China locking in the world's largest oil reserve outside the dollar system for decades. The US government made a decision. If we allow this to proceed, if we allow China to lock in Venezuela's 303 billion barrels of reserves in yuan, the petrodollar will be finished. Other countries will follow. Saudi Arabia will flip. The entire system will collapse. So on January 3rd, 2026, they invaded.